Hello, traders. FX Pip Collector here. Today is Monday, January 27th, and this is my morning video where we like to cover the main US dollar pairs, including gold, and we also take a look at a few of the JPY pairs. If you haven't done so already, definitely join my free Discord trading community. It is 100% free to join. The link is at the end of this video over here in the corner and in the description. If you would like to join my membership program, then you do so by joining at my website, fxpipcollector.com. It is only $30 a month and it gets you access to all the benefits that are scrolling across the screen down here. So, anyways, I always like to start off by looking at the news calendar. It's a habit that I see that a lot of traders don't do, and you definitely should do. Today is Monday, and normally Monday doesn't have a whole lot of news. We had President Lagarde from the European Central Bank this morning talking. We had a little bit of news coming out of Germany this morning. That's already done with. This afternoon, we got new home sales for the US. Probably not going to be that big of a deal. Maybe, maybe not. We'll see. And then this evening we have somebody from the Swiss National Bank talking. So if you are trading the Swiss pairs, you definitely want to pay attention to this. That definitely may have an impact on the Swiss pairs. But just because there's not a lot on the news calendar definitely doesn't mean that the markets may not move. You never know. Trump could say something that moves the markets pretty dramatically today. So I like to start off with the US dollar index. Now, the US dollar index, if you have been watching my videos, you know that I think that we are in a wave C. You know that I think that we're eventually going to make a big downtrend for a bigger wave C. So this would be an A, B, C, or B. This would be the A, and then eventually we would go down and make a C for an A, B, C correction. So I think that we're in a wave C of wave B. The question is whether that wave C of wave B is actually over or not. I was definitely thinking originally that it wasn't, but boy, this is looking pretty impulsive, so it may actually already be over. Taking it down to the 1 hour time frame, we do have a breaker structure to the downside on the 1 hour, but I am still looking at this as either a wave A or a wave 1. I don't really care whether it's an A or a wave 1 because it's exactly the same trading strategy. The next move would be a pullback, most likely, for either a wave B or a wave 2. How would I trade a wave B? I would look for longs on shorter time frames. How would I trade a wave 2? I would look for longs on shorter time frames. So at this point in the pattern, I still do not care whether it's an A, B, or an 1, 2 because it's exactly the same trading strategy either way. So keep that in mind because what you learn on the US dollar index will help you with trading direction on literally every single one of these US dollar pairs, except for maybe gold because gold doesn't really care about the dollar. So let's get started with the euro dollar analysis. First thing I need to do is go to this weekly time frame because last week's candle closed extremely bullish. You can see that this is like the most bullish candle on the chart for the most part, which tells me that this wave C actually may be over. And if this wave C really is over, then this actually may be already going up in the bigger wave C, just like the dollar analysis. I think this is an A, I think this is a B, and I think we need to go up and make a wave C. Last week's candle definitely makes me feel like this is a pretty bullish turn, and that this may actually be the turn we've been waiting for. Going down to the daily, we do have a breaker starts at the upside now. So I definitely would be looking for longs. Now this could end up being another ABC correction, maybe end up looking something like this and continuing down again. And if it does do that, we definitely should be able to recognize that as an ABC, and we definitely should be able to go short for the continuation of the uptrend. But if this really is the end of a wave B or 2, then this potentially is just going to keep on making higher highs, higher lows, and start a brand new uptrend. Either scenario, whether it's an A or 1, I would be looking for longs on shorter time frames. Going down to the 1 hour time frame, I don't really put a whole lot of analysis on the 1 hour because the only thing I would be doing on these sort of time frames is looking for entries in the direction of my higher time frames. First push up right here is probably a 1. This is probably a 2. I still think this is all a wave 3 because we don't even have a breaker structure yet. This potentially could just keep on going. Eventually, I think it should make a pullback for a wave 4 and another push up for a wave 5. And this would be the completion of the first uptrend, which is either a wave A or a wave 1. Like I've been saying, the trading strategy for a wave A is exactly the same trading strategy for a wave 1. No difference whatsoever. So let's move on to the pound dollar. Let's go all the way up to the weekly time frame because I need to show you guys how strong these weekly candles closed. I do think that the pound dollar has been a wave C, and if you've been watching my videos, I've been saying this is a wave C pretty much since it turned down way back here in like October of last year. So I think this is likely a running flat. Three waves down, three waves up, five waves down, higher low, higher low, higher low, running flat. That weekly candle definitely makes me think that this trend is over and that we are already into a new uptrend for the wave C. So A, B, C, or maybe one, two, three. I'm definitely leaning towards A, B, C. Now, on the pound dollar, we technically have not broken structure on the pound dollar because it has not taken out the previous high, but based on correlated pairs, especially the dollar index, I definitely would consider this a reversal. It definitely looks to me like an uptrend, just like the other pairs, definitely either a wave A or a wave 1. Trading strategy is exactly the same for a wave A as it is for a wave 1, so it doesn't matter at this point. Going down to the 1 hour time frame, just like the euro dollar, I think we are likely in a wave 3 of A or a wave 3 of wave 1. So wave 1, wave 2, this is all a wave 3, which it doesn't even look like it's over. We have no break of structure down telling us the wave 3 is over. It potentially could continue in a wave 3. Eventually, it probably will make a crescent similar to this wave 2 for like a wave 4, and then probably back up for a wave 5. And this would be a 1, 2, 3, 4, 5 of A, or it's a 1, 2, 3, 4, 5 of wave 1. Wave 1 and wave A pretty much play out exactly the same, which is why the trading strategy is exactly the same for wave A as it is a wave 1, which would be looking for longs at the end of pullbacks. So moving on to the Aussie dollar, I want to take it all the way up to the weekly time frame on this one also because I think that this is a little different, but I think it's the same type of pattern. I think this is impulsive up, and then this is a WXY correction right here. So three waves down, three waves up, and then more like five waves down, but still three waves down, WXY of Y, three waves up, ABC of B, and then five waves down for the wave C of wave X. That's a very impulsive turn right there. Looks like to me it potentially could now be already back into an uptrend, which would be around the same size as this previous uptrend over here. Probably just like the other pairs, it's probably going to be an A, a B, and a C, just like the pound dollar and just like the euro dollar. Same type of thing, just a little bit different. Moving down to the daily, we definitely got a break of structure to the upside on the daily, and it did hold. Now that proves to me that this whole downtrend right here is over. I've been thinking that this was going to end up being an ABC of 4, just like I was thinking that on the other dollar pairs, and that it was going to go down again for a wave 5. But looking at that weekly time frame kind of makes me think that that is not true, that this is not an ABC correction, but instead it's going to be a 1, a 2, and then it just keeps on stretching out for a wave 3, not a wave C. So keeping that in mind, let's take it down to the 1 hour time frame. Just like all the other pairs, it looks like we're missing a wave 4 and a wave 5. It looks like a wave 1. It looks like a wave 2. This one did just about break structure on the 1 hour. So it's probably telling me that the wave 3 is over and that this is now going to be like an ABC of B. I'm sorry, ABC of B. This is like the A, and we're probably going to go down for like a C, and this would be an ABC of 4, and then probably up again for a wave 5 to complete the 1, 2, 3, 4, 5 pattern of wave A or wave 1. Just like all the other dollar pairs, I don't really care whether it's a wave 1 or a wave A because it's exactly the same trading strategy. The next move when it does finish this wave A or 1 will be a wave B and a wave 2. How would I trade a wave B? I'd be looking for sorts. How would I trade a wave 2? I'd be looking for sorts. It's exactly the same trading strategy until you get into the wave 3 or the wave C. So moving on to the Kiwi dollar, I don't really put much time into analyzing the Kiwi dollar. I do trade it, but the Kiwi dollar is exactly the same as the Aussie dollar, so we don't really put much time into it. So moving on to the US dollar CAD. Now the US dollar CAD is another one that totally looks like it should be pretty much over. I think this is a big WXY on the monthly time frame, and I still think this move up right here is like a crutch until this move down. It doesn't mean that it won't take out these highs, but it definitely looks like we are going to end up turning down at some point for a big downtrend. Just like all these pairs look like they're going to turn up, the US dollar CAD looks like it needs to turn down for a big downtrend for the wave C of wave Y. If you go all the way up to the monthly time frame, you'll see what I mean. A, B, C of wave Y. So let's take it down to the daily because unlike most of the other dollar pairs, this really has not been able to break structure yet. Definitely looks like 1, 2, 3, 4, 5 waves up. We just don't have the break of structure confirming that this uptrend is over yet. So what does that tell me? That tells me that we had to be very cautious with assuming that this uptrend is over. This could potentially go up and make a new high still. There's no proof that the trend is over. And if there's no proof the trend is over, then I would definitely suggest looking for longs on shorter time frames. Going down to the 1 hour time frame, it's definitely kind of a mess on the 1 hour time frame, but the trend is up on the higher time frame, so we should be on the long side primarily. I got my Fibonacci retracement on this last push down because if this does end up being an A and this is a B and this is a C, then it would likely go to any one of these Fibonacci levels, maybe something like this, break structure to the downside. It doesn't have to happen at this fib level. It could potentially go up to the next fib level. But if you see this break of structure at a Fibonacci level, then it probably would make for a pretty nice short. But like I said, I would be very cautious because the trend is up on all higher time frames. It potentially could go up, make a higher low, go up, make a higher low, go up, make a higher low, bounce from fib levels, not give you a break of structure, and just keep on trending up, which is why I would definitely suggest looking for logs as of now. So let's move on to the US dollar Swiss. The US dollar Swiss is actually one of the ones that I've been saying likely will take out the high wave 4, which it definitely has not done so yet. So I still think there is definitely a possibility that it goes up one more time to grab those highs before it turns down for the big move. But like I've been saying, either way, to me, it doesn't matter. Why does it not matter? Because right now we are in a downtrend, which is either an A or 1. I would be looking for shorts on the sort of time phase for A or 1. Eventually, it's going to turn back up and make a B or a 2. What would I be doing for a B or 2? I'd be looking for longs on sort of time frames. Then it should turn down for a C, which would look like that, which I would look for shorts until I see proof that the wave C is over. Then I would go back to looking for longs. Or it's going to make a wave 3, which would not break structure, and it'll just make lower lows, lower highs. So for me, it's not even important at all to know the difference until we get to about that point right there. And the market will tell you whether it's a wave 3 or whether it's a wave C if you pay very close attention to your structure and your Fibonacci levels. So moving on to the 1 hour time frame, definitely looks like a downtrend. Most likely it's a wave A or possibly a wave 1. Like I explained on the higher time phase, it doesn't matter. Eventually, I would expect it to push up and break structure, but maybe it's going to go down and break this before it does so, like this. But if you see a break of structure on the 1 hour time frame to the upside, that most likely is telling you that we're now going up for the wave B or the wave 2. A wave B or wave 2 should be a crescent to the wave A. So knowing that, you would put your Fibonacci level on the wave A or the wave 1, and you would look for a corrective pattern for the wave B or the wave 2. Like I said, the trading stance is exactly the same for B as it is the 2, which is looking for longs on these sort of time frames. So moving on to gold. Gold hasn't really made much of a turn yet. Now, I still think there's a very good chance if you go all the way up to the weekly time frame that this is going to end up going down and making a wave C. So you'd have an A, you would have a B, you would have a C of wave 4. So it definitely still looks like it needs to go down and make a wave C, but you go to the 1 hour time frame and we definitely do not have a break of structure down yet. The last structure is right here. Only thing that's going to prove to me that this is really going down is a break below this structure that holds, then a pullback, and then I would enter short at the end of the pullback for the wave C. So when we have our Fibonacci extension on this wave A, projected out the wave B, we are at the 100% Fibonacci extension right now, which has been my target that I've been talking about for at least a week or more. So we have definitely reached my target for a wave B. We just do not have the actual turn yet for the continuation down. So going down to the 1 hour time frame, I would definitely primarily be looking for longs. Unless it goes down and breaks and holds below this structure right here, the trend is still up. Even though we're at my target, it doesn't necessarily have to stop here. The market knows best, so if it makes a higher low, it goes up, and then it makes a higher low, it goes up. Why not just continue to look for longs unless the market proves to you that it's going down by giving you a nice break and hold below structure, telling you that the market really has finished this wave B. So if it breaks and holds below structure, I'll be more than happy to look for shorts. If it just continues to make higher lows, higher lows, higher lows, then I would definitely continue to look for longs at the end of every pullback I see. This move down definitely looks more like a trend, so you would kind of expect it to be going up now for either wave B or wave 2, which would likely be a crescent to this wave A or the wave 1. Kind of similar to the dollar in a way, just a little bit different as always. As always, gold has to be a little bit on the different side. Going all the way up to the weekly time frame on the US dollar yen, I personally think that this wave B is over on the dollar yen. I personally think that we are down for a big wave C, which should take out all these lows. Might even try to go down and take out this low. So that if that's true, that means we're at the very early stages of a big downtrend. The trend is definitely down. As you can see, it's breaking down. There's no reason to even think about going long, in my opinion. Going down to the 1 hour time frame. I mean, if you've been following along with my videos, I've been saying look for sorts. I mean, look at these sorts. I mean, there's been some pretty nice little sorting opportunities if you are paying attention to my videos over the last several weeks. It was definitely ranging for quite a while, but yeah, I mean, my suggestion is still looking for sorts. Now, people hear me say look for sorts and they think that they can go sort now. I 100% would not go sort now. I would only go sort if it makes another pullback. If it makes another decent pullback, and I see especially some sort of a three-way pullback, that would be my next sorting opportunity. I definitely wouldn't try to go short now, and I definitely wouldn't try to go long anticipating a pullback. I would only be looking for shorts, and I would only go short at the end of three-way pullbacks and Fibonacci bounces for the continuation of the downtrend. Moving on to the euro yen. The euro yen also made a pretty decent push up. If this breaks below this blue line that I have right here, then it's probably just going to keep on going down. Just like the dollar yen, I think the wave B is over. I think this is potentially a 1 and this is potentially a 2, and we're going to go down for a wave 3 of wave C. If we go all the way up to the weekly, it's a little easier to see what I mean. I think that this is going to potentially end up going down for a wave C of wave 4 for an A, B, C correction to the last push up. So definitely seems to me like we should be potentially pretty bullish, but we did turn up pretty hard. And it does kind of seem like it would try to now go up and take out these highs before it went down. But like I always say, the market knows best. If the market breaks structure, then that means that we should be looking for shorts again. And that we should be anticipating this going down. If it doesn't break structure, but it makes a higher low, then it's probably going to go up and take out these highs before it goes down. So as usual, we have a couple possibilities. I would be looking focusing on longs, anticipating this scenario. But if the market tells us otherwise by breaking below this structure, I would definitely start looking for shorts after the break of structure. So going down to the 1 hour time frame, if you grasp it what I was just saying, if this makes either like a double bottom or a higher low, I would go long. If it breaks below structure and holds below structure and then makes a pullback, I would go short. So I would just be paying very close attention to what happens. The trend is technically up on the higher time phase, but if it breaks below here, then the trend will change to down again. Definitely looks like 5 waves up. So I don't know. I mean, I'm thinking that it might end up breaking down, pulling back, and continuing the downtrend. So we definitely want to keep an eye on our structure and pay attention for a breakdown. Otherwise, if it makes a higher low, then you could definitely go long again. Moving on to the pound yen, it's exactly the same as the euro yen, just a little bit of a different shape. I still think this is an A. I still think this is a B. I still think it potentially is going to go down and make a wave C of wave 4, and then eventually go up for a wave 5. But this is the weekly, monthly time frame, so that's going to take a very long time to play out. Now we are kind of in an up move right now. The trend is kind of up, and it definitely kind of looks like this could be a 1, and this potentially could be going up for a wave 2 like an A, B, C of 2, and then eventually back down for a C, and that would be like a 1, 2, 3 of wave C of that ABC correction I showed you on the higher time frames. So going down to the 1 hour time frame, it's exactly the same thing as I said about the euro yen. Now this definitely looks like it already has 5 waves, so it might end up breaking down. But we don't know that for sure. So if this makes a higher low, and engulfing up, then I would always suggest looking for longs because technically the higher time frame is up. So if you see something like this, you see a higher low and engulfing up, then I would go long. On the other hand, if it keeps drifting down, breaks this structure, then pulls back, I would definitely at that point go short. So it all depends on what the market's telling us. If it makes a higher low, I would be long all day long. If it breaks structure and then pulls back, I would be more than happy to go short because then the market would be telling me that we're back into a move to the downside. So as far as all these other pairs are concerned, I do analyze every single thing on this list, and I've actually added a few things. I've also analyzed some of these indices and a couple of commodities, including oil. I analyze every single thing on this list every single day for my premium members. So if you are interested in that, the link is down here. It's fxpipcollector.com. You get access to a lot of really good benefits. If you just want to join my free Discord channel, then it's 100% free to join. The link for that is in the corner of the screen and at the end of this video. So as always, thank you for watching and happy trading.